Hi, and welcome to episode 4 of Homebuyer University. Today I want to talk about credit score. This is one of those mystical things that happens inside of a box that nobody really knows exactly how the credit companies figure it out, but it's definitely worth your time to learn a little bit about what it's all about. So what is a credit score? This is going to be so important as you get ready to buy your house, because the better your credit score, the lower your interest rate, and the more money that that banks and lenders are going to feel comfortable giving to you, because they are seeing that you have a history of repaying that money. So what is a credit score? It's a 3-digit code that's generated. There are 3 credit bureaus for consumers: Experian, TransUnion, and Equifax. There are lots of companies that use that score to make decisions about you, including some that you might not have thought about. And some other companies, especially lenders, take the information that those credit bureaus provide and they use it to create their own code, and they use that to make decisions about you. So whether you're buying auto insurance, renting an apartment, looking for a credit card, or even some things that I don't even know, like some weird things. I forget what I had to do the other day that they were asking for, information to do my credit score. So there's a good chance that any of those things that you want to do, obviously buying things, cars, getting credit cards, whatever, there's a good chance that one or all of the bureaus will be contacted, and they're going to be asked to give the company your history. So that's what your credit score is, based on your credit history and some other criteria. So we're going to talk about that. The reason they do that is because a lot of businesses believe, rightly or wrongly, and I want to say probably rightly in a lot of cases, that people with good credit are more reliable. So they see that you have this history, somebody lent you money and you paid it back. Someone else, you had a bill and then you paid your bill. So they feel like that shows consistency, and it shows that you have a good character. So let's say your friend Debbie asked you to lend her $50. Don't you want to know, well, did I ever lend, have you ever borrowed money from anybody before, Debbie? Did you pay it back? Can I talk to the people who you borrowed it from and see how quickly you paid it back? Have you ever lent Debbie money before, and has she ever paid it back? Because if the answer is no, what are the chances you're going to want to give her more money, right? And that's exactly what the credit bureaus are doing with you. So when you apply for a mortgage, of course, that's probably going to be your biggest debt ever. So the lender definitely wants to know, what's your history? What's the chances that you're going to pay back that money and not just walk away from the house and go on your merry way? And in their opinion, past history, what you've done in the past, can help them to calculate the odds. So what's your credit score? If you can't tell me right off the top of your head, then I really am telling you that you need to become intentional. If you want to buy a house, you want to become intentional about finding out what your credit score is and keeping track of it and making sure that it's good and clean. And that's for any type of wealth creation. If you want to be rich in your life someday, or if you just want to be comfortable, please be intentional about your credit and about paying your bills on time, and about thinking about money and being responsible about your money. So all that stuff, all that great wealth starts with a great credit score. That's my motto for the day. So right now you can put me on pause, and you can go to annualcreditreport.com. There are lots of places where you can get your free credit report, but that's the actual real one, where the government has set up a place where you can go and get one free credit report from each of the 3 bureaus. So that's TransUnion, Equifax, and Experian. Every year you can get one free credit report from each of those bureaus. And annualcreditreport.com is the official place to do that, okay? Now you get your report, and I want you to look at every single item on the report, everything, and make sure it looks familiar. Weird things can happen. One time I had somebody else's car loan on my credit report. Mistakes are made, okay? Some of these things, there's humans involved somehow, so mistakes can definitely be made. And the other thing that you might find is I canceled a card, or I hadn't used a card for 10 years, and then I used it, and then I had moved. I didn't realize they had my old address, and so they sent it to that address, and then bad things happened. They ended up charging off the credit. A lot of credit card companies have rules that they won't forward. Even if you want them to forward, they won't forward your mail to another address because that helps them to cut down on fraud. So you might just totally forget. Like I had this happen to my boyfriend where he had charged something at Home Depot, and it was the kind of thing where if you get a new credit card, you can save, $50. So he had a bill of like $52. So he had this $2 bill that got sent to his old address, and he didn't get it. So that $2 bill that he never paid and totally forgot about completely screwed up his credit for months. And then when he went and finally figured it out and contacted Home Depot and tried to pay it off, they were like, "Oh, we charged it off. You can't pay it off now. You can't get it off your card now. I'm sorry, you can't get it off your credit report anymore. It's going to impact your credit score until it doesn't. So really try to look at every single thing on the list. And if it is like, say you owe Verizon $6 because you moved and you didn't pay it. If you owe $6, you might as well owe $6,000 because it shows that you aren't paying your bills on time. So pay that off, contact them and say, "Oh gosh, this was a mistake. Is there any way you can get it off my credit report?" So, and the other thing you can do is if you see things that are not accurate, there's usually a button to dispute the item. So just click on dispute the item and explain to them like, "This is not me," or this didn't happen, or "I really paid the bill and here's some evidence," or whatever the case may be. Okay, so now that's for stuff that's inaccurate. Things that are yours and are accurate, is everything current? If they're not current, you have to get them current. If you don't feel like you have the resources to get these things current, well, first of all, you're probably not going to have the resources to buy a house. But if you don't have the resources to get them current right now, then just contact the company and say, "Look, I really want to get caught up on this bill. It's been going on and now I've got these fees, and is there anything that we can do to negotiate this down so that I can make it a manageable payment each month?" Whatever that may be, because it's absolutely imperative that all of your bills are current. So nothing's late if you want to buy a house someday, okay? You will find that lenders, people and institutions that are going to lend you money, they are not glass half full kind of people. They're not like, "Oh, but look, they paid all these other bills on time." They don't care. They don't care. If you owe 39 cents to Verizon, then they're just like, "Oh, forget it. They didn't pay Verizon. They might not pay us." Okay, they really like to zoom in on the bad stuff. So make sure there's no bad stuff for them to zoom in on. Now, it's going to take a couple of months for your credit score to reflect the changes that you make. So let's say you find a bill on there for Verizon for $10, and then you pay it off. You say, "Oh gosh, I totally forgot and I had moved and it never caught up with me. I'm happy. I called Verizon, I gave them the $10, and that's going to show up as paid off," but it's going to take a couple of months for that to reflect on your credit report. So that's why it's good to do it today, right now, before you're like really invested in buying a house, and then you find that $10 Verizon bill. Okay, so once everything is current and you've got everything that's done, let's say that you pay off your Verizon bill, but it still shows up as a negative, as an old bill that wasn't paid on time. If you can, and I mean you can, you're allowed to, and if you could, like if you have like the resources, write a letter explaining why this happened. So say, "Oh, I'm sorry about this Verizon bill. I moved and it didn't follow me, and I'm just really upset about it. And once I discovered that it was there, it's been paid off, and that's it." And then you send a copy of that letter to whatever bureau is showing the item, or to all of them if they're all showing the item. And then that letter will go along with your credit report when anybody requests your credit. It's not perfect, but at least it shows that you're on the right track, and it also shows that you're being intentional about improving your credit, okay? So we don't know exactly, I don't know, somebody must know, but I don't know exactly what weight all the different criteria are given inside that machine that comes up with your actual score. But here are some of the components. One of them is available debt. So how much available debt do you have? Available debt is how much you would owe if you maxed out every single credit line that you have. So, and to a lender, this is like, oh, this is how much debt they could potentially have, right? So this is the worst possible scenario. So you add up the credit lines for all your credit cards and the original balance for any loans that you have. So if you have, here's an example. Okay, let's say you have 3 credit cards and a car payment. so you can add up the credit lines of your credit cards and the amount that you initially borrowed for your car loan, and you can figure out that you have $40,000 in available debt. So that's 2 credit cards with a $7,500 credit line, 1 card with a $5,000 credit line, and $20,000 was the original balance on your car loan. That all adds up to $40,000. Okay, so there's your available debt. Now, the next factor in your credit score, which is credit utilization, goes hand in hand with that. So how much of your available debt of $40,000 is actually available? So to figure that out, you're going to add up the balance, the outstanding balance on all your 3 credit cards plus your car loan. Okay, you add those up, and then you divide the total that you get from adding up the current balance on your credit cards. So how much you owe still on your credit cards plus your car loan, and that's just as an example. Obviously, you're going to do that with your own stuff. So if you have 5, 10, 100 credit cards or 1 credit card, you're going to add up how much you owe them, the credit card company, plus the car loan, plus whatever else you have. And then you're going to divide that total of the outstanding balance. You divide that by your total available debt. So if we use the example from above where you had $40,000 of available debt, let's say that you owe a total of $7,500 on the credit card, and you still owe on all 3 credit cards, and you still owe $10,000 on your car. So that means you have $17,500 that you owe between your credit cards and your car loan, and $40,000 of available debt. So you divide $17,500 by $40,000, and you're going to find out that you're using 43.75% of your available credit. So that's okay, because lenders like that number to be low, and that is within the boundaries of less than 50%. So you owe less than 50% of what you could possibly owe if you maxed everything out. So does that make sense? The other thing that you want to think about is how much on each card. So let's say you have $7,500 in credit cards across 3 cards, but maybe 1 card has $7,500 and the other 2 have 0. That sort of shows up as you've got 1 credit line that's 100% maxed out, and maxing things out is not good. So what would be a better scenario is if you have 3 credit cards and you only owe you've got $7,500 in credit card debt spread across 3 credit cards, and each one has $2,500. So that way you'd never be more than 50%. You'd never be using more than 50% of your available credit in that particular card. So does that make sense? It's a little bit confusing, and I'm happy to talk it through with you if you'd like. But in general, your credit score will be higher if the balance was spread equally, and keeping those limits between the amount that you owe to the card and the amount that you could potentially owe to the card if that's less than 50%. And this is also in the blog, so if you want to see this in writing, it might help you to go to the blog and figure that out. So the good news is if you can transfer the balance from the $7,500 that you had on 1 card, and you can transfer $2,500 and $2,500 to the other 2 in a couple of months, that's going to make a difference, and that's going to help your credit score. If you only have 1 card, here's a quick, easy way to lower the percentage that you're using. Is you call the credit card company and say, hey, I've been such a great customer, would you like to raise my limit? And if you can get them to raise your limit, then that can also help. That can also make a difference, because you'd be using a smaller percentage of your total available debt on that 1 card. Here's something that not everybody realizes, but credit inquiries also make a difference. They also hurt your score. And the reason, I think, is because people are wondering, lenders, entities that would potentially lend you money, they see you applying for all kinds of credit, then they think you are having financial difficulty and you're trying to find some more places to get money. And so that's not great. And you might not realize it, like, talking about my boyfriend again, the reason he opened that stupid Home Depot card, which was a 2nd or 3rd Home Depot card that he had, was because he wanted to save $50. But he didn't realize that even if he wouldn't have forgot to pay the bill, and his score dropped like 100 points because of that, but even if he would not have forgot to pay the bill, even if he would have remembered to pay it, and if it followed him to his address, he still would have impacted his credit, because he has a string of credit inquiries like, oh, I went to Lowe's and I saved $20 by opening this credit card. And then I went to Kohl's and they gave me a $5 coupon for opening a card or whatever. All those times that you apply for those credit cards, they all are going to the credit bureau, and that shows up. It's like, oh, here, he wanted to get money from Lowe's. Oh, he wanted to get money from Home Depot. Oh, he wanted to borrow money from this other place. And it makes you look like you just really need money. So don't do it. Don't even think about it, because that $5 that you saved by opening that Kohl's charge, that might have cost you $100 on your auto insurance, because your auto company looks at that, your insurance company looks at that and says, oh, this person doesn't have good, financial sense, so we're going to charge them more for their insurance. And it really does look like that. I mean, it really does work like that. So once you decide you want to buy something like a house, go to the credit bureau and lock your credit, and don't open it again until the lender requests it. And that way, hopefully, you'll refrain. That way you will have to refrain. You'll only be able to be intentional about opening up a card. Like anytime I'm tempted to open up a store credit card because they have like such a fantastic deal, I think to myself, oh my God, that's going to be such a hassle. I've got to go in, I've got to unlock my credit, blah, 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 blah. And so that just talked myself right out of it. And that has allowed me to have a really excellent credit score. So that's my advice to you. And now the final one that I'm aware of is the age of the credit. And this is tough if you're young, because you just don't have accounts that have been open all that long. One thing you can do is, if all you have, for example, is a checking account, see if there's a line of credit associated with your checking account, because I think that what they do is they merge the two together. So if you've had a checking account for 5 years and you get a line of credit on that checking account, it's going to look like you've had that line of credit for 5 years, which is great. And another thing you can sometimes do, and I've heard that this works and I have not done it myself, is that if you get an additional card, so if your parents, let's say, have, like my parents have an LL card. So if I said to them, hey, will you get me a family card for LL Bean? And they just say, oh, we want to add a card holder onto our account. Same thing. So now you have an LL Bean card that has 15 years worth of history. And that helps you, because again, it shows that you have consistent, it looks like you've had a consistent history of paying off your bills and having this credit card active, and they haven't canceled you and they haven't had to take you to court. So I think that's it. I'm just checking the blog as I talk to you. You probably saw my eyes going back and forth. I'm actually reading the blog that I wrote that you can also do. But yeah, if you have a credit card, a lot of credit card companies also offer a calculator, and you can go in there and do like a simulator. Sorry, a calculator / simulator. So you can go in and say, what happens if I close this account? And you find out that's the one account that you have that's 10 years old, and now all your credit's only going to be a year old. You say, oh, gee, that's going to drop my points, my credit score down by 40 points. And what if I pay this off early? Then this is going to happen. One thing I noticed at one point was that one of the simulation things that I said is, what if I pay off this full balance? What if I pay off the whole balance of this account? And it turned out that if I paid it in 3 installments, that it actually had a better impact on my credit than if I would have just paid it in one lump sum. So keep that in mind as well. And if you've got access to some type of a credit simulator, then go ahead and check that out and make sure that you're making the best decisions possible for your credit. Again, I'm not a credit advisor. I'm not a credit coach, but I have a lot of experience with this kind of thing, and I'm happy to answer any questions that you have. And I guess that's it. So my advice to you is, make a decision today to be intentional about having great credit. I'm remembering a young girl, very sweet person, when we were renting an apartment. She seemed so nice. I really liked her. We ran her credit, and first of all, she had hardly any credit. And so she was probably trying to get credit to increase her credit score. But when I looked, she had like 12 inquiries. And that had really impacted her score. She was like 500, which is very low. I remember hearing somebody talk about this. I don't remember who it was, but they were like, hey, the first time I ran my credit, I was so excited. I'm like, hey, 500, that's like, that seems really great. 500 is not great. 850 is the most you can get, and most lenders, I mean, you can get a loan with a credit score of like 650, 630, but you're going to pay more for that loan. So if you can get your credit score up to be like 700, you're going to have an easier time renting apartments. You're going to get a better price on your auto insurance. You're going to have an easier time getting a loan. You're going to have a lot more options. And, you'll be surprised at how good it makes your life and how well that is going to poise you to have an excellent and successful financial future. So come back for Homebuyer University Part 5. And in the meantime, have a wonderful day, week, month, year, life. Oh, I can't get